Good morning, traders. I'm Michael Sabo, Senior Commodities Broker here with RJO Futures on Wednesday, September 25th. Bringing you some commentary here in the energy market, so let's get started here. Well, right now we've got crude prices here. They are a little bit firmer here. We were trading up around 103.55. It was up about 42 cents on the day. Now, I want to talk about here a little bit about yesterday here. Yesterday we got down to a low of around 102.30. Came up here, market was a little bit firmer than throughout the rest of the session, and we saw the market close at around 103.13. Now today so far, the low has been 103.11, highs of around 103.96. And again, like I said, we're trading here. We're up here about 42 cents here. So Brent also firmer there. We're up about 73 cents, around 109.37. Complex is firmer. We're up about 2.5 cents, and the nat gas up about a penny here right now. Right before we came in to do this video, we did get out EIA data. So, traders were looking for a draw of around about 1 million barrels here. We actually saw a build come in of about 2.6 million barrels. And what we quickly saw was that market that was trading around that 103.55. Last glance before I jumped in here, we were already down and we had given up those gains here on the day. So, we are seeing that market give up a little bit. Now, one of the things that I talked about in prior posts here was this market kind of targeting down around this 103 to 103 half area. And we've seen it. That market has really been traveling that distance, falling down into these levels. And actually, as I mentioned, yesterday's low actually traveling through it here a little bit. Short-term technical indicators, in my opinion, though, we're starting to look a little bit oversold down here. Equities markets has been weaker. Some of the economic data that's been coming out has been a little bit weaker. We've got this threat looming of a potential government shutdown, which I don't think is going to happen, but all these things are kind of weighing on the market. Now, something that's important, though, to take a look at, though, in the EIA data is that the refinery capacity utilization has been running above 90%. And if you look at our 5-year average, that's pretty high for this time of year. So if we start to see that number start to fade and the capacity utilization start to come down, that could quickly ramp up our stockpiles. And if that's the case, we could see crude prices moving down to around that $100 a barrel. So, as traders, I think what you want to do is watch the crude prices. In my opinion, I think look for this bounce to continue up, possibly around the 104, 104 half area. And then at that time, you might want to take a look at it for a possible sell. But there's risk here. We still have problems in Syria. There's still, there's things, if you follow the political news here, Obama talking with the new president of Iran, and there's still a little bit of things going on there. So we could see that fear premium build back into the market here a little bit. So we've got to be careful. But give me a call, shoot me an email. I've got some ideas on some new trades that we're taking a look at, as well as some risk management ideas for you, whether you're a bull or a bear right now in the market. So give me a call, shoot me an email. Numbers on the screen, and of course keep in mind that futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.